If something should happen to you, would your loved ones be taken care of? Well, it's really important to have a financial safety net, especially if you have financial dependents. Joining me now is Paul Blanco, the Managing Director of Barnum Financial Group, to tell us more about this. Welcome back to the show, Paul. It's always great to have you.
Thanks, Jocelyn. Thank you so much for having me.
Okay, so September is Life Insurance Awareness Month?
Yes, it is.
And that's so needed. Why is that?
Well, the industry came together, and over hundreds of companies came together, and they really wanted to make our society really aware of life insurance and what it does for people and the things that happens to your family if you don't have it. So it's been September all along.
Well, a lot of people think about it. They say, oh yeah, I really have to do it. But then they forget, or something else happens, and they never get to that point until, of course, they realize they don't have it when they really need it.
Yeah, you know, and it's something that people need to take care of, especially as you grow and your family grows and you have dependents. And, you know, it really should be called love insurance. And
that's a good idea. I like that.
Instead of life insurance, because it's really about taking care of people that you care about. And when you have dependents, it's really important that you have that.
Now, you should sign up for this even at tough economic times, when people are trying to save money for the simple things of life.
Yeah, and you know, it's interesting, for less than 1% of your income, you could have protection. And, you know, we always kid people, but we say it's not about the product that you buy. That's a business decision. And you hear people talk about whole life or term, which one's better? Which one's better? And I always tell them, the one that's better is the one that's in force if something happens to you or your family. So it's really critical that they could buy something for $20, $30 a month and protect their whole family.
So you're really looking at what is going to benefit the family the most, and also what they can afford at the time?
Correct. Affordability is probably the most critical thing, because it's more important to have it in your affordability range than to not. And I think, you know, there's a big thing, what's the right amount? And there's all different talks about that.
So what do you say to your clients when they ask you that question?
Well, there's all different ways to look at it. There's one thing called the human life value, which is if you're making $50,000 and you're 30 years old, maybe if you're gone, would your family have your income for 30 years? So you just take the 50 times the 30. Or you can look at just what we call a dominant need, where people have debt and mortgages and tuition payments if they weren't there, and you could take that number. So it's really a preference, but I really think it's critical that they meet with an advisor, because an advisor can walk them through that. And then when you get to the type, you know, that's really a business decision.
But it can be overwhelming. The information is just so complex.
Yeah, and I think that today with some of the research they can do, you know, there's different tests that you can take, like a life insurance test that tells you what type, or one that you can do that's the right amount. And then after you do a little research and you meet with an advisor, if the advisor's not educating you, you really don't have the right person.
Okay, give us an idea as to how much life insurance could cost, the minimum.
Yeah, I mean, like I said earlier, if you're a 25-year-old new married couple and they wanted, you know, $250,000 of coverage, maybe it's $50, $60 a month, depending on their health.
That's it.
Yeah, and here's the key thing that people miss. You know, when you're young and healthier, we hope that when you age, you continue to keep that health. But if you buy term insurance, you could actually lock in your health at that younger age, and you always could convert that to some of the other types of permanent policies.
So it's better to actually sign up when you're younger and healthier?
Yeah, and most protection products, that's the case. And sometimes people just put it, as you said earlier, people procrastinate.
They do.
And they say, you know, I'm going to do it tomorrow, until something happens. Or they see something happen in their neighborhood or their family member. And, you know, some families, how do children go to school? How does another spouse support their income? You have single family, you know, single moms out there, single dads, how do they take care of their children if they don't have that protection?
Well, you say you can start early, but what about if you have procrastinated? Can you start any time?
Yeah, the right time is today.
Okay.
And September is a great month to do that, because as we spoke, Life Insurance Awareness Month, you know, pick up the phone, call an advisor, and get someone in there to help you go through all the different pieces of it. And one of the other fallacies out there is, I have insurance at work. And you hear that all the time. And as we watch companies cut and benefits over the years, people went from having 5 and 6 times their income to 1 time. Some even have none. But if you only have 1 time your income, that's 1 year that your family is going to be able to continue the standard of living. And that's the key thing. How do you want your family to live if you're not around?
Should you start even when you're single, Paul?
Yes.
Really?
Well, and it's interesting, and people sometimes will buy policies. We call it a gift of love. And when they buy policies for a newborn child, and it's about getting their insurable interest when they're young, and there's policies that actually build up cash. And they can have that policy for the rest of their life. So when they have their first home, or they get married, they can actually use some of that money to put a down payment on the house.
Like equity.
You can build equity in it. And the challenge is if you wait till you're older, that gets very costly.
Exactly.
So if you do it when you're younger, it's much more beneficial.
Okay, what's the biggest mistake people make when they sign up for life insurance?
One, I think, is waiting. Number two is not understanding the right type. Number three is the right amount. So they might buy a policy that's more expensive, but if they passed away, they don't have enough coverage. So I think it's a combination of plans, and that's where they need the right advisor. Also is procrastination. And then, you know what's really the worst thing is?
What's that?
Is times get tough, like you said. They lose their job, and they have a transition period, and they cancel things like life insurance.
And they shouldn't, should they?
No, they should maybe cancel cable if they can't afford it. But, you know, cable's going to still be there if they pass away, but wouldn't they rather have the insurance there so that those children or that spouse can continue their same lifestyle?
Absolutely. All right, for more information, all you have to do is contact Barnum Financial Group. That phone number is right there on your screen, 203-513-6000, or visit barnumfinancialgroup.com.
Thank you so much.
Oh, you're so welcome, Paul. It's always great to have you with us.
Same here. Same here. Thanks.
All right, don't go away. There's more Connecticut Style right after this.
Is that okay?